Traditionally, what would happen is that someone would perhaps have that the old shoebox approach of putting all the receipts and all the expenses in a shoebox, giving it to their accountant at the end of the year, letting him sort it out, and 3 or 4 months later you would come back with their business taxes and say, well, good news or bad news, you did or didn't make money last year, and you do or you don't owe taxes. And you go and go about and keep going about your business. That was maybe not okay, but at least it worked at that time. But today, as our business cycles have become shorter and shorter, and the pressure really to understand the consequences of business decisions is greater and greater, it means really that any company, no matter how small, has got to have good bookkeeping and accounting practices. No, over and over and over again, really. It's the sad tale that a company has insufficient or incompetent bookkeeping and accounting practices, and it just causes them a great deal of trouble with all kinds of different players. It's a big problem, of course, with their relationship with the Internal Revenue Service. You need to report your business taxes. You need to do so in a way that they can come in and audit. If they're too suspicious, they will audit, and that's something that no one wants to go through. You have responsibilities to other tax agencies, often at the state and even local level. You have responsibilities to other partners or stockholders in the company. You need to be able to track your business activities and know that you have for real expenses and real revenues, and understand, track, and predict those flows. And all in all, it's a very great deal of information that if you don't have access to and you don't have at your fingertips, then you can't make good business decisions. Well, you have actually a number of choices. And one of them is you can hire an outside part-time bookkeeping service to come in and set you up with a program, accumulate your receipts, and build a transaction-based business model, and then give you on a very regular basis the information that you need to understand whether or not you're making money in your business. And if you aren't making money, what you probably need to do in order to change that very, very quickly. That works for one level of person. The next level, there just are a lot of business record-keeping systems available, from the ancient dome systems where you fill out a little loose leaf binder and track your business that way, often in a traditional family-based proprietorship. One member of the family runs the business, the other one tends to do the bookkeeping and manage the financial affairs. Those systems are not responsive enough for today's activities, and so you really need to move up to something like a computer-based system such as QuickBooks, which a great many companies use these days. And it's a very simple process where you enter information according to various prompts, and you get back at the push of a button accounting statements that tell you basically how you're doing. Small businesses don't really think of themselves as running management systems, and yet the very accounting information that they collect is the heart of their management system. And their management system is really the comprehensive information that they need to make good decisions every day. They need this information to be available. They need to know as soon as they aren't making money. They need to be able to put their finger on that and stop that problem right away, because it will escalate very, very rapidly. So today we can use a full-blown MRP system, so-called, which is a management reporting system that will give the information that you need in the context of something called a dashboard. And a dashboard is a very interesting thing. A dashboard is driven by two things. One, you build a business budget that is specific to your business, that lays out in detail what every element of the operation is. That goes into the system. Now your accounting system starts to collect the operational data in that same format and continually compares the two. As soon as the actual operation deviates from the budget, then it throws up a warning flag on this very simplified report format that pops up on your screen called a dashboard. What it means is that the business doesn't have to worry about all of the areas of their business that are proceeding according to plan. They only need to worry about the area of the business that's not according to the plan, and then to bring about corrective action as rapidly as possible on that element of the business. And really, you know, for $150 a month, you can have an online system. You don't have to worry about the software, where it's lodged. You don't have to worry about how it's managed. You don't have to have any IT people to take care of your network or anything else. And the information is generated and entered from a number of different places where it happens. Like you do credit card sales, that information goes straight into the accounting system, so some clerk doesn't have to then pull it off this account and go over and enter it over here into this system. And then it turns around and compares all of those activities to your budget and tells you how you're doing on a constant real-time basis.
For more information on the topics discussed in this presentation, please access the following links.